Good evening to everyone gathered here for today's event. We have with us our Chief Investment Officer, Mr. Sunil Damania, in the Q&A session. You can drop in any queries you have in the Q&A box just below the video on stock sectors or market caps, and our panelists would answer them. Over to you, Mr. Sunil.
Hey, thanks a lot, Jason, and very warm welcome all of you. I know market is frustrating. कोई डायरेक्शन ही नहीं दे रहा है किधर जाना है उसको ना ऊपर जाना है ना नीचे जाना है. And it's been frustrating, one day one company will go up, some other company will go up. जो कंपनी पिट जाती है वापस 2-3 दिन ऊपर चले जाती है. So it's a very confusing kind of a scenario, and sometimes you wonder क्या हो रहा है, like you are like scratching your head to figure out what is happening in the market. And this is not the first time it's happening in the history of Indian equity market. It has happened in the past and it can happen in the future also. So it's a part and parcel of the market movement. But before I begin my webinar, we open the floor. I have few slides for you to see, giving you some insights about what's happening in the market. And then we will open the floor for question and answer. But before that, my favorite slide, disclaimer. This webinar is only for an education purpose. Whenever you invest in the equity market, it does carry a little higher amount of risk, and past performance should not be considered as an indicator for future returns. Now, I know some of you people are a little overexcited about, your question, and of course you people write on social media also. Okay, the moderator is not picking up my question. Sometimes it's practically not possible to pick up all questions at any point of time, because thousands of investors attend this webinar and practically impossible for to address each one question. Sometimes one investor will have 3-4 questions also, and that multiply the problem for the moderator. So my humble request to all of you is that please don't put the question again if it has already been answered by me, because why? It was going to make other people bored about the same company or same sector. That's number one. For some reason, if your question has not been picked up, don't keep reposting again and again, because that will create a Bloomberg screen for Jason, which we don't want. And number 3, many of you would have access to the Markets Mojo website, and hence you can see the score of the company. Sometimes my view can differ from the Markets Mojo view. That does not, you have a choice to pick up. Normally you should go with Markets Mojo view, because my view would have a colored with the human bias. Am I right? But don't write back to our customer care department saying, "Hey, Sunil is saying so and so, score is so and so." Yes, there could be few cases that could be a difference, okay? But you have a choice, to pick and choose. So please don't waste your time writing back to us, because we will not be able to respond, because we are making this disclaimer upfront to you people. So that means I assume that you understand that there could be some cases difference of opinion, and hence don't write back to us. Now look at December result season is over, and we are going to make a very detailed presentation very soon to all of you. But look at the numbers. Quarter on quarter, it was not an easy quarter. Let me tell you one thing very frankly. Why? It was not an easy quarter, because market economy has to go through a lot of adjustment from October to December, and yet the quarter on quarter growth of 18%. And when it comes to Y on Y, 3.5%. So, and if you happen to listen to the commentary given by the India Inc, no one is talking about gloom and doom scenarios. That's a very happy scenario. Of course, as you know, I did mention, I think yesterday, Jason, or the previous webinar, where GST collection for the month of Feb could be a little lower than what it was there previous month. I did predict that. So there's some amount of slowdown that we are sensing right now at the ground level, and we need to wait and watch how sustainable that slowdown could be. One big danger, definitely market will try to figure it out, is a El Nino impact. For some reason, there is a El Nino, probability of El Nino. See, this is too early. No one knows for sure. And the clear-cut trend will emerge somewhere by May or so. Whether there is a El Nino impact in India, and if yes, from which period. If it gets postponed to August, September, our season would have been over. So we don't have to worry. But if it has to kick in, if at all it has to kick in, by July or so, it could create some amount of a pressure on the rural economy, which in turn could pressure on the economy. Why? Because government need to put some fiscal measures to ensure that the damage has been limited, and that could also impact the earnings of India Inc. But we are all living in a very uncertain environment. We don't know what's going to happen to the monsoon. Monsoon by nature is highly unpredictable. Number one. Number two, we also know how to look at it, monsoon, not only from the point of view of how it is going to perform LPA, that is long period average, but what has been the spread of monsoon in the region where we have a high agri inputs and so on and so forth. So right now numbers look extremely good. No reason to worry on the India Inc numbers. And sometimes the market is known to defy the logic, isn't it? And this is the classical case of that. So what I've done, I've taken the Nifty 50 movement since beginning of 2023 till today. And if you look at it, we had fear of capital gain tax coming on equity, or some kind of tweak in, not fear of capital gain, no, but tweaking in the capital gain tax. That's a fear we had. We had Adani episode. We had budget. We had Fed rate hike. We had RBI rate hike. We had result season. And yet this market has moved in an extremely narrow range. In fact, logically it should be more volatile, isn't it? 600-700 पॉइंट का ही खाली निफ्टी 50 में movement है between high and low, and that gives an idea about how market is moving. And if you look at the high is 18,232, am I right? And the low is 17,602. Today we are 17,827. So, and we open at 18,197. So market hardly moved up by 35, 36 points. The day it become from the beginning of 2000, this level. और इसके बाद the trend has been negative only. So this market, if I can say so, it's a narrow with the downward bias. That's what the market I can sum it up. And if I have to really look at it, which index, there has been some life. Nifty IT, which we had predicted in our beginning of 2023, also should outperform. It did well. Capital goods did well, which we had predicted also. We did mention metal should do well, which has not done well. Let me tell you upfront, it's one of the worst performing right now, purely because of the metal prices. Despite reopening of China, the prices are not reflecting that. And I was reading on research report today which says that the steel prices have come down, while in Europe and other places, the price of steel has gone up. For Indian players, prices are not gone up, but input cost has gone up. And what happened with Turkey? In Turkey, there would be more demand, so the supply from steel will get impacted there, and there will be more demand to reconstruct the house, and that could boost up demand in the Europe. That's what the news I was reading, research report I was reading. So steel can do well, but of course, if a lot of people are going to put green energy or focus on the green environment, demand for non-ferrous metals should also do very well. But it has not. So IT did well, capital goods did well, auto did well, 4.26% up. FMCG seems to be more of a, what we call, return of capital, rather return on capital story being played out. CPST has done well, but that's not been the case with PSU Bank. PSU Bank has been down by 14.3%. Nifty Realty continued to underperform, and we have time and again said that don't get excited by reading in the newspaper कि realty sector में तेजी है, more goods are being sold, more flats are being sold, but somewhere is not reflecting in the index. Bank Nifty is also coming under pressure, down by 5% in 2023. So whether it's a PSU bank, whether it's a bank, the complete pack seems to be underperforming, and I think that's one of the reasons we don't see so much movement in the Sensex and Nifty. Normally, what I've observed always that BSE 100 followed by BSE 200 and then followed by BSE 500, either on the upside or on the downside. I can't recollect, I have been doing this presentation for quite some time, and this is the first time that's what my memory shows me, that BSE 200 is down by 2.1%, 2.01%, BSE 500 is down by 3.58%, and BSE 200 is down by 3.7%. Now, usually what happens, 100, 200 and 500. Here the equation looks little different. I don't know why that happened, but that's the reality. I had mentioned also Sensex will outperform Nifty. Why? Because Nifty 50 does have Adani Enterprise as a part of it, which is not the case with Sensex. And we all know that Adani Group continue to remain extremely volatile. And they lost substantial part of the market cap. We don't own any of the Adani Group companies in our portfolio, neither in model portfolio nor in our Mojo Infinity. And thankfully, we did not see this kind of an volatility happening in the portfolio. FIIs have sold in the month of Feb, but only 10% of what they sold in the month of January. So total 31,000 crore YTD for FII, 29,000 crore came from January, substantially lower in February. And if you look at the trend, does give the feeling that by the time the month comes to an end, today is 21st, so we still have 7 days. Maybe there is a high probability that we might see this numbers turning into green. But of course, that's too short a period. But what it does give the feeling the trend seems to be turning positive as far as FIIs are concerned. We will wait and watch. 1 month doesn't define the trend, but we'll wait and watch. Before I open the floor for question answer, we do have a very excellent subscription offer. Only at 26,999. Not only you get 2 years, but you get additional 3 months. So that means even though you pay only for 24 months, your subscription validity is for 27 months. What this package also has is a mutual fund transaction free. So even if you save 1% on a mutual fund transaction, it amounts to a huge amount of money over the years. Am I right? Because there is always trailing commission that gets built into. And 26,999 itself is 33% discount to the MRP. So आपको by paying 26,999, not only you are getting 33% discount on the MRP, you are getting additional 3 months of subscription, that is 27 months instead of 24 months. And you're also getting mutual fund transaction where you can save a lot of money depending upon the amount you invest in the mutual fund. I must tell you and congratulate and thank you all of you. We have received an excellent response from all of you on the mutual fund transaction. Thousands of investors have imported their mutual fund portfolio on our website. Thousands of investors have done transaction through our mutual fund platform. And we have got a overwhelming response from all of you. The kind of love that you have given to our mutual fund transaction is unimaginable. So thanks a lot for that, giving that love, and you like the product. But please do write to us in case if you want us to improve our product further. And we would love to have your constructive criticism to make product much better. With this, let's open the floor. I hope you have put the link so that we can open the floor for question answer.
Yes, the link is just below the video. Moving on to this first question by Mr. Tapan. Not a single stock of my IT in the portfolio, as well as 8 stocks are down from 9% out of 11 stocks. What's the logic behind not including IT stocks where market smooth's predictions are high?
So Tapanji, in Infinity, first we have a view on the market cap, and in Soul we have higher market cap allocation to small and mid cap as compared to large cap. In Power, we invest only up to 20% in small cap, but our allocation to mid and large can go up to 80%. And that could be the reason why you don't have any IT stocks in your portfolio. See, our IP will select based on the construct of the portfolio, what your existing portfolio is. If there is no churn, how do we accommodate any IT company in your portfolio? So that could be the reason why you don't have any IT company in the portfolio. So that's what but of course, I need to go through your portfolio to understand what exactly why you are not being recommended. Is it you are not fitting into market cap allocation, or your existing stocks are so strong that I don't have to add another IT companies? And also you need to understand, Tapanji, is that whether portfolio is outperforming or not. It seems that in your case it's not outperforming. So sometimes even if you don't have IT stock companies in your portfolio yet it's outperforming, you should be fine. Why? Because ultimately, जरूरी नहीं कि सिर्फ IT company चलेगा. Ultimately what defines your returns is the stock you hold in the portfolio. The sector may not be doing so great, but the company that you are holding is doing great, then you should be fine with that.
Okay, moving to this next question. This is by Saurabh. He actually has a suggestion. Can we have an option to compare 2 stocks side by side? Right now we can open both stocks separately and compare changing tabs, but can this be incorporated?
So Saurabh ji, it's a good suggestion. I don't know whether we can do that. We do have some comparison in peers, but I'm not very. And if you download the report, I think it would have given a lot of insights about the peer group also. But you need 2 stocks, so I don't know whether the 2 stocks is from the same industry or not. It's a good suggestion. I'll speak to my product and IT team because that's their call. To be very frank with you, it's not something where I have a domain expertise or I have a weight in saying so, because they will design and they will decide whether it makes sense or not. So I'll request Jason, just put it down our WhatsApp group and let our product and tech team take it forward from there. But thanks for your suggestion, sir.
Okay, moving on to this next particular question. This is by Mr. Arvind. Could you please share your opinion on Maharashtra Seamless?
So let me see the score, because I was just mentioning about the metal prices and other things. And Maharashtra's... I'm looking at the score, sir. So Maharashtra Seamless is an exit as per our IP. My request to you, sir, would be make an exit. Remember, this exit, I am saying this is Markets Mojo webinar. It's not Mojo Infinity webinar. And you all know that we have decoupled our IP on Markets Mojo and Mojo Infinity. So don't get confused. Whatever statement I'm going to make is basically based on the Markets Mojo website, this one. So please bear this fact in mind. It's a sale in our system. You can exit, sir, in case if you're holding the company.
Okay, Mr. Thampi has asked a very straightforward question. When is the good times going to come, sir?
Thampi ji, I was doing one review today with one of our Mojo Infinity customers, and I did mention to him December 2020 that उनका जो portfolio है, not only in green but outperforming. It's very difficult to pinpoint कि कभी होने वाला है. Had I had that kind of an insight, sir, Thampi ji, I would have made tons of money in the market because मैं क्या I feel if I know this is the way it's going to turn around, मैं बहुत कुछ ले लेता उसी समय पे before the good time arrives, and then you can ride the upside. Unfortunately, it's very difficult to pinpoint. But I do believe, and of course this is the based on the learning that you have over last 35 years, that whenever market moves in a very narrow range, it does give a very substantial upside or downside in quick time. And the focus, that the reason why I was showing you that Nifty 50 graph is that market is moving in a very, very narrow range. And if that is so, I think we are due for upside or downside, and substantial upside or downside. My sense is it should be upside. Why? India Inc is doing well, commentary is good. India would be among the fastest growing economies in the world despite challenges. Deleveraged balance sheet, return on equities improving. This all makes me believe. And FI जितना बेचना था कुछ 1.5 लाख करोड़ का बेच दिया 2022 से, beginning of this one, on an average. तो अभी उससे ज़्यादा क्या बेचेगा? That's what the question that I am asking myself actually. So there is a huge potential for upside, but when it will happen, whether it happens in 1 month, 2 months, 3 months, very difficult to say, sir. Very difficult to say. और फिर मैंने कुछ बोल भी दिया तो आप लोग तो उसको पकड़ लेते हो. अरे आपने तो ये बोला था, हुआ नहीं है. So I am also a human being. I can also go wrong, and I will go wrong. Am I right? So that's why I said 2023. I do believe we'll make a lot of money, but will it happen in first half, second half, last quarter? Very difficult to say. Market is all about non-linear returns, and that's why I keep saying, Thampi ji, is that focus on the process, and if your process is right, outcome has to be good over medium to long term, and that's what exactly we follow on, sir, in our process. And hence, good time आएगा तो आने जब भी आएगा तभी आएगा, but you should not try to attempt even to time the market.
This question by Mr. Udayanag. Hi, so there is too much churn in the Mojo stocks. This is causing a lot of entry and exit scenarios and causing losses. Can you help in optimizing the strategy?
We did mention that, sir. Yesterday also I did mention that we have taken care of that. So now you will not see much of a churn happening in the Mojo stock. Having said that, when company cease to be a Mojo stock does not mean that you need to exit from that company. Sera Sanitary is a classical example where it exited Mojo stock list, again become a Mojo stock list. It never went out of a master list. So we were holding this company in our model portfolio. In Mojo Infinity, we did not exit, even though it ceased to be Mojo stock. But having said that, we are taking care of that entry and exit.
Okay, moving to this next question. This is by Saurabh. So we have the financial trend as well as technical trend plotted with the price graph. Can the same done be for Mojo Scores as well? It would be great if you can see how the process has moved over time.
Saurabh ji, one after another, you are just recommending very good suggestion. Again, I'll speak to my product and tech team, and it's their call. To be very frank, it's not my area of domain where I can basically, they are the final authority, and in fact you will be surprised to know that we do have a project meeting every day where every leader is part of that except me. Why? Because मेरे लिए इसमें कुछ काम ही नहीं है. तो and it's always best the people, those who understand that domain expertise, let them take the call on that. I don't know, Saurabh ji, whatever suggestion you are giving, how many people would be excited also about that? To be very frank with you, I don't know. But nonetheless, I will request Jason to please pass on to the concerned team and let them take a call based on the merit of each one.
Okay, moving to this next question by Durgesh. Hi Sunil Sir, what's your opinion on Bank of Baroda, especially in the wake of their loans to Adani Group? In spite of their CEO's assurance, today the share was down by 3%.
So I think what Durgesh ji, CEO of Adani Group, not the Bank of Baroda, said that if the project meets our lending criteria, we will give loan to Adani Group. And that's a fair question, a statement to be made. Why should you basically not lend someone if they meet your stringent lending criteria? Am I right? So that's what the statement has been made. Why it was down by 3% almost today? No, I have no idea. And what is the assurance is given today? I don't know what assurance is given. I'm not very sure what assurance you are referring to. But it's not only that Bank of Baroda is down by 3%. I think there will be many other banking stocks which would be done more than that. Am I right? So let me see Bank of Baroda. And when I look at the peer group, so if you can look at it, today Bank of Baroda is down by 2.65%, Canada Bank is down by 3.46%, Bank of India is down by 6%, UCO Bank is down by 4%, Central Bank is down by 2%. So it's not that, I think what you're attributing to the comments, I'm not very sure that's the reason why the script would have taken a beating, because there was some selling pressure across the board in the PSU bank. And if that is so, don't read too much into what CEO of Bank of Baroda said, and due to that, fall in the price of the Bank of Baroda.
Okay, this next question by Manish. Please provide your conclusion of Gulf Oil Lubricants. Also, I do not expect the reply that you can check the IP score, it's hold.
So I don't know whether you happen to that YouTube video is available. My request to all of you that please go through that. So I think the industry need to do a lot of education. When I say industry, Gulf and Castrol and so on, they more to educate the investors. See, the market has a habit of rewarding those companies whose future looks excellent. So they may not be doing well, but the future looks very promising. Am I right? And market is not willing to give the premium where the future looks little uncertain. The complete auto space is going through a lot of transformation in terms of automation, in terms of new norms coming in terms of emissions, ethanol blending program we are talking about, hydrogen, electrical cars, lithium ion cell, and so on and so forth. So a lot of things are happening, and that's where, if you think from the fund manager point of view, he would be less inclined to get into an industry where future looks little uncertain. Market का एक नियम है, and that's a collective wisdom of the market. Okay, whenever they see some amount of volatility or they expect uncertainty, they are not comfortable in terms of paying premium. And that's exactly my sense is that I think the industry needs to spend a lot of time to convince the fund managers, institutional investors, retail investors, this scenario is not gloom and doom, which if you remember, the CFO of Gulf also explained to us, at least 70 to 80% of the business that they have will continue to be there. It's not going to be there. The question comes that where would the growth would come from? If 70-80% remains there, 20% will go out. What will replace the 20% to? And also over and above that, where would the growth would come from? The estimates are that 3 to 4% volume growth that can take place because of long-term technology that's been employed, and hence your need to replace your oil in the car or your two-wheeler and so or heavy vehicles does take little more longer, and hence the replacement demand get little elongated in little longer. So I think it's a little challenge right now in terms of, and hence should it be a top pick as we speak? Answer is no.
Okay, moving to this next particular question. This is by Debishc, and a lot of investors actually writing this. Any particular reason we are not treating life insurance businesses?
No, Devashish, so we started that process of rating a life insurance company. The reason why we are not, because see, their business model is a little different. So, you can't run our analysis on life insurance company the what we do for manufacturing or service company. Why? Because वहाँ पे we need to look at persistence ratio, embedded value, and so on and so forth, which are very unique terminology applicable only to the life insurance company. So there's some data gap that we have realized that we have not received from our data provider. So our team is working on daily basis to see that there are 4 companies only life insurance mein, and our team is working on to see that it gives that. So at any day, if we get the data from our data provider, I think we should be able to make it live insurance companies.
Okay, moving to this next particular question. This is by Amish. Need an advice if there's any way to find out in which stocks FIIs are increasing or decreasing holding on a daily basis. Presently, we get this information on quarterly basis only.
Amish, I think you had also asked this question to Mohit. That's what my understanding is. Because Mohit did ask this question, and so sir, there are no data which I'm aware about, which will give you data about which companies FIIs are increasing or decreasing their holding on daily basis. I don't think this data is available in the public domain. This data could only be available with NSDL, CDSL, because it would leave that demat holding of that the aggregate of FIIs. But I don't think they disclose this data on a daily basis. So very difficult to say, sir. But if you go to NSDL's website, they do give an idea about on a 15 days basis. I again repeat, on a 15 days basis, you don't have to wait for quarter also. 15 days basis, the sector movement, where they are buying and where they are selling. Of course, again, this will not be company specific. But on a sector, you will figure it out where they put money, where they take out the money, kind of stuff. So that's available on NSDL website.
Okay, question by Mr. Velicheti. Dear Sunilji, kindly tell me your opinion on Maruti Suzuki, because I heard some news on GST increase and coming months on SUV.
So we continue to believe Maruti should do well. The numbers have also come out extremely well for December. The commentary remained quite robust from the Maruti management. GST increase, I doubt that's going to happen. So see, and one should never react on the news, because sometimes news may be right, sometimes news may be wrong. And you can't take investment decision based on that news. Yes, maybe you can take a trading call based on the news, but I suspect that GST will go up for SUVs. I suspect. Why I'll give you reasoning why. I'm a more logical person in terms of my reasoning. I basically reason it out based on logic. Now, automobile is one of the highest employer in the country, indirectly and indirectly. Why? Because you consume steel. Steel is a manufacturing. You consume tire, which is manufacturing. You consume auto ancillary, that's various parts that goes, which is labor. I don't think government would like to disturb, because it could disturb the other companies within that ecosystem, which in turn could impact the employment. So I don't think the GST is going to increase. Of course, it's very difficult to read the mind of the members of GST Council. If you ask me my probability of GST increasing in SUV, I would say only 1%. 99% I don't expect this to happen. And GST Council kabhi baithne wali. I don't think it's going to meet very soon. Of course, there was some proposal of cement ka that did not happen. There was a news that they might bring it down. उनका एजेंडा में नहीं था. तो I don't know where you read this news about GST increasing on SUV. I don't think that's going to happen.
Okay. Moving to this next particular question. This is by Kedar. Quarter-on-quarter net profit growth is more due to bank's profit. Otherwise, it is negative growth. Also, Nifty 50 10-year average PE is 21 plus something. There is mean reverse happening to mid and small caps. Any comments on this?
So, Kedarji, you're right, some profit has come because of the bank really helping them to grow. But then your Nifty also includes banks, am I right? Your Sensex also includes bank. Then why should we exclude them actually, isn't it? And when the foreigners look at it, they look at Nifty 50 P, which includes everything, banks ho ya na ho. And anyway, they have a high weightage also. So why do we need to isolate banks? I don't see a reason that. Now, your sir is that your statement is that a 10-year average of a Nifty 50 is 20 plus or something. So you may be right in terms of that one. So let me show you some data. But if you look at it, India 10 years average, we are lower than what we call the 10-year average in terms of price to earnings. So if I can take my slide, can you just, Jason, can you just? Yeah. So this data is updated till 31st Jan, and if you look at our 10-year average of, this is a forward P here, so it's 19.8, and we are at 18.4. So are we trading at premium or are we trading at discount? We are trading at discount to the 10-year average. This is despite that if you look at our ROE is much higher than the 10-year average, 13.6 versus 15.8. So my sense is, sir, that there is no mean reversal that can take place. In case if it has to happen, it has to happen on the upside, not on the downside. So I think your query was on the downside. And another leg of your question was that mid and small cap. We do believe that they should outperform the large cap in 2020. That's not happened in first 1.5 months of 2023. But there is still a long way to go in 2000. It's too early to make any meaningful conclusion there.
Okay, this question by Sarang, it's about Tata Elxi stock. It was in the model portfolio with about 30% profit. There was no sell call given, but when the sell call was being given, I was around a loss of 10%. Don't you think some algorithm has to be changed for profit booking sell calls?
So Sarang, I think we are implementing profit booking. We have introduced in our Infinity, we are introducing also going to do in our model portfolio, but it has to cross certain threshold limit. I am not going to discuss that threshold limit in the public forum because that's our IP and it's not appropriate. But having said that, rest assured, we have fine-tuned our strategy in terms of entry as well as exit so that your returns from the stock script moves up substantially higher. So that has been anyway taken care of, Sarang.
Okay, question by one of the investors, Mr. Balkrishna. Your view on PI industry that it had stellar results, especially in the context of predicting chemicals may underperform. Also, is it advisable to add JTEKT and ACCELYA at current levels? In fact, JTEKT is a buy in markets mojo.
So let me answer first PI. So what I mentioned yesterday about chemical is a commodity business. PI is more into agrochemical, supplying to some of the what we call the branded players. Outside India. So I think the revenue model is different. So I don't think PI industry is going to underperform. That's what that's what our IP also suggests. Because last time when I checked, someone asked me about PI and UPL, and I did mention that PI. So PI is a score of 64. My suggestion would be please continue to hold. ACCELYA, please continue to hold. I do believe it should do well. Of course, it's not done well so much after becoming the stock of the month. Today it was up, and that's one day, so don't get too much. JTEKT, I think, let me see the score. The score is not buy, sir. It's a hold right now with the score of 64. My advice would be don't buy, just continue to hold. Don't add more.
Okay, moving to this next particular question. This is by Anjali. Despite 80 plus Mojo scores since last couple of months, Reddington is not delivering any positive return. Can you throw some light on it?
See, Anjali ji, there are always exceptions in the rule. And Reddington is one company which is exception to the rule. Having said that, will it not move up at all? Looks a little doubtful. There's a strong business profile, strong product profile. I think they should do well. You're right, it's not done well. So sometimes, I always tell investors, if you're a little concerned about it's not moved up, please stay away right now. When it show you some positive moment, try to go and buy that particular company. That's what another way you can look at it. But having said that, its continues to remain a strong buy in our system. So my advice would be, if you already bought it, please continue to hold the company. Should you buy more? That's, I think, is an individual call that you need to take. I would rather prefer to see some momentum happening before buying more.
Okay, this next question by Manan. What's your views about market hours extension?
So, Manan, I have a little different view. I don't know, our other leaders in our team have that well. So, I say I'm strongly of the opinion, and in fact, I expressed this opinion on CNBC almost 3-4 years back when there was this one. I strongly believe that market hours should get extended. Why market should only be 5.5 hours? Which market, you tell me, is only open for 5 hours? Your retail shop remain open more than 12 hours. Your kirana stores remain open for longer. That's all market only, am I right? That's a marketplace. So why stock market should only be 5.5 hours? Now someone would argue, but it's not happening in some other country. Why should we? Why can't we take the lead? India was the first country in the world to go have a demat. India was one of the pioneers in terms of online trading. Why can't we do this? So I personally believe it should be extended. I know some people are making you and cry, what happens to the manpower, this and that. Other industries have survived and thriving with longer number of hours. Why? What is the problem? If you have to recruit more people, please recruit more people, because you will have more revenue also, am I right? If the market is going to remain open for longer number of hours, more trade will happen, which is in a good, and the price discovery will be much better, because the longer you will be able to react to some news which will happen after post 3:30. You don't have to wait for the next day to react to that. Am I right? So I am strongly, this is my personal opinion, this is not Markets Mojo opinion, I am strongly in favor of higher number of hours, because it will give more opportunity for market to react to the live news, which is a good thing. What is wrong with that? So I personally believe it should remain open. In fact, I don't know the data which is the longest number of working hours in some other parts of the world, but I strongly believe India should have longer working hours for the market. And it's in the interest of everyone. We have moved T+1. Let me tell you one thing. Okay, which country has a T+1? Why can't we take a lead? And today so much automation has happened. Someone would say if the longer number of hours, that means the back office has to work a little longer. This automation is available. Why can't we use automation also to make the things live? Someone was arguing, but banks are not open for so many long hours. I also suggest even RBI should make it mandatory. Why can't bank remain open for this one? Of course, you have net banking 24/7 now. So you can always transfer money, you can go to ATM, withdraw money, and so forth. So most of the things you are able to do if you are online. And stock market is online. Why can't we do that actually? There is no longer that someone has to go to the trading ring and do soda for you. It's completely online. So I see less merit. And if you look at some data, very interesting data which is presented by Angel One on their investor presentation Q3, उसमें आपको पता चलेगा top 5 digital brokers what percentage they account for. And if the digital broking में तो क्या है, सब कुछ आपके पास accessible है. Pay in and payout can happen very smoothly because everything is online. So I personally believe it should be extended. I see no reason why it should not be extended, to be very frank with you. Of course, this is my personal view. Again, I say Mohit may have a different view, Joyson may have a different view, other our leaders may have a different view. Of course, our team also need to get work little longer hours and so forth. But so be it. Something which is good for the economy, something good for the investors. If someone has to work little longer, or more manpower need to be recruited, so be it. What is wrong with that? It will generate more employment also. It will generate more revenue also for the government. if the market remains longer. So I'm all for it.
Okay. So moving to this next particular question, this is by Anshul. So I was looking at the stock of the month performance for the last 12 months. There's a lot of negative return. Could you please share a view on this and also correct me if I'm wrong?
So Anshul, you're right. See, we need to always, things should be looked in the context of the overall market scenario, am I right? For example, last 1 year the market has gone nowhere. And in that context, if you look at it, see the beauty is that yes, they may not have moved up significantly. Like Sera is up by 18%, which was down actually. Or, our ITC, which is up by 41% or so, which we recommended in June 2022. So again fits into 1 year category. Or Bharat Dynamics, which is up by 30%, which was recommended in April 2000, which is up. So what has happened? Yes, the market was a little challenging and some of the companies did give very good returns, 30, 40 and 20 kind of stuff. But some companies, they did not do well. Let me tell you frankly. Like for example, EIA Engineering, which we recommended last week, down by only 1.72% or so, 1.41. Exide 1.72. JK Paper 2.34. ACCELYA, which is down by 16%. I agree with that, substantially down. Ori's down by 12%. So the downside has been little limited, upside has been good. And of course, the market has been little volatile. That's why they have not done well. So I think we need to all basically have patience with the stock of the month. One of the big factor that we look at it, when we select the stock of the month, look at the market environment. And today we are playing more defensive because pitch itna saath nahi de rahi hai. So that's why we are having defensive stock selection. The moment market change the gear and go in the bull zone, our strategy will also undergo change. So one of the reasons why we are looking at more protection of the capital in the stock of the month than capital appreciation. And that's why the downside is limited, but upside is potential is very, very high. Otherwise, market went down substantially in the month of December, 3.2%. In the month of January, another 3.4%. But if you look at the company that we selected, like JKP, only down by 2.34%. That's in December. So would have outperformed the benchmark. So is the case with Exide Industries, which was recommended in the month of January, down by only 1.72. One good day, and they could be all in green also. Why? Because they are one day price movement can bring them to the green zone kind of stuff. But I agree with your observation. It's not done as much as we would love to do that. But that's also because of the overall market condition, overall fancy in this. See, if you look at it, despite so many banks were in demand, PSU banks and public sector, private sector banks, we did not make any companies a stock of the month purely because there was a feeling that, right now they are doing well, but will they able to sustain going forward or not? And that's one of the reasons you don't see any bank being selected as a stock of the month. So as I was explaining you, we'll look at more in a manner how the market is going to perform going forward, how the sector is going to move going forward. Like for example, Sera Sanitaryware, I had gone on the record, it was down by 10% or so, and I did mention that please go ahead and buy if you have not bought it. It is down today. I agree with you, but it's not going to remain down for a longer period of time, and it's gone up by 18.27%. So minus 10 भी cover कर लिया, उसके ऊपर ने 18% दे दिया, and that all happened in last 2 months or so. So that's the thing. It's going to they're all fundamentally good company, very rock solid management, and it's been handpicked just to ensure that they deliver good returns to the investors.
Okay. This next question by Mr. Shamim. I have 95 stocks in my portfolio. When I try to optimize, it is selling stocks which have small units or making 52-week highs. I don't want to sell those stocks which is generating 1A. In this case, which stock we have to sell who is having greater in units?
After selling stock which is small unit and making up 52.
I think it's going to TL stocks.
So I think, sir, first thing, if you have 95 stocks, very obviously you would have some stocks whose value is so low, is not going to move needle of your portfolio. वो कितना जैसे yesterday I was saying, one company I have in my personal portfolio is gone up so many times, 1,000 times or so, maybe up. I have such a small allocation to that, it's not moving needle of my portfolio too much. Am I right? So I'll give you a classical example. It's a chemical company. I continue to hold. Let me tell you that also. Even though my view on the chemical is not so great, I continue to hold that chemical company. And I invested. अच्छा पैसा लगाया था 4-5-6 साल पहले. The script has gone up substantially. कुछ 7-8 times return बना दिया उसने अब तक. Okay. तभी मैंने बहुत अच्छा पैसा डाला था उसमें. But when I look at it right now, because others have also done well, I would have put more money into this one. It's not going to move needle of my portfolio in that case. So my friend was asking me, "Arey Sunil, what happened to that stock?" And I don't look at it also because it's not going to move needle of my portfolio. So why do basically waste so much time and energy? Then he asked me, "तूने तो बहुत अच्छा पैसा डाला था, पर हाँ, पर in the current scheme of things, despite it moved up, it's not moving the needle of my portfolio." So something similar, sir, in your case. The reason why our portfolio optimizer is asking you, it's not moving needle of your portfolio. And if that's so, वो ऊपर भी जाएगा तो क्या फायदा है? And Samim ji, 95 stocks in a portfolio is a crime. I again repeat, is a crime that you are doing. Why? कभी आपका पैसा बनेगा ही नहीं मार्केट से. Because some will go up, someone will go down. I think Warren Buffett has a very nice thing. Over diversification is a sign of ignorance. Because आपको पता नहीं है क्या करना है मार्केट में. इसलिए ये ले लिया, वो ले लिया, उस एडवाइजर को फॉलो कर दिया, उस एडवाइजर को फॉलो कर लिया, एंड इट्स ए खिचड़ी काइंड ऑफ स्टफ. इट्स अ hodgepodge thing, and hodgepodge as a strategy will never make money for you. Then you remain invested in 10 years, 15 years, 20 years, 30 years in equity market. Market ऊपर जाएगा, आपका पैसा नहीं बनेगा. Am I right? So that's the reason why your strategy, and if you're not comfortable, इसको साइड पे बना दो. Then divide into 2 portfolio. One, you don't want to get out of it. Am I right? Because आपने मन बना दिया है कि कुछ भी हो जाए, मुझे उसमें से निकलना ही नहीं है. Then where you want to seriously run that portfolio optimizer, उसका एक अलग portfolio बनाओ, उस पे optimizer run कर दो, and then our optimizer will tell you what you need to do. So this is the way you can tackle your this one. तो first अपनी choice की बना दो जिसको आपको निकलना ही निकम what में, maybe of sentimental reason, because you believe you have an opinion on that company very strong, उसको अलग कर दो, और जिस पे आपको opinion करना है उसको focus करो. And that's the way I would recommend it. So if you go to a very classical thing I'll tell you. You go to a doctor और आपने अपना health report बना दिया अक्खा. You know what he looks at it? जहाँ पे वो out of range है, वो अक्खा रिपोर्ट उसका टाइम भी नहीं आता उतना, तो वो क्या देखता है, जिसका आउट ऑफ रेंज है उसको देख लेगा मोटा मोटा फटाफट, एंड देन ही विल प्रिस्क्राइब यू मेडिसिन, ही विल टेल यू कि क्या करना है. सेम वे यू नीड टू अप्लाई दैट सेम लॉजिक केयर. जिसमें आपको व्यू चाहिए, जिसमें आपको वो चाहिए, उसको ही पोर्टफोलियो अपना डालो एंड रन दैट. आई होप मेक्स योर लाइफ सिंपलर, समीम जी.
Okay, moving to this next question. Good evening, Sunilji. I want to keep only one of these stocks, Narayan Hrudaya or Max Healthcare. Which one would you pick personally?
यहाँ पे मेरा पर्सनल ओपिनियन मायने नहीं रखता, सौरभ जी. I would request you to please go through with the score of the company and take this one. So I think I used to have Max Healthcare and I got out. कुछ 425, 430 पे मुझे ऐसा कुछ याद आ रहा है. But of late then I've stopped tracking it to be. Let me see the score, what we call price of Max Healthcare. What is it? Max Healthcare का 433 पे है, चल रहा है. It's a buy in our system, so it's a 70. The same price what I got out, but of course I got out quite some time back. And 730 is a 68. So between these two right now, it's Max Healthcare. Which one I'll pick personally right now? मेरा कोई प्रेफरेंस नहीं है दोनों में, टू बी वेरी फ्रैंक विद यू, बिकॉज आई एम नॉट ट्रैकिंग दिस इंडस्ट्री फॉर क्वाइट सम टाइम, बोथ कंप्लीट हेल्थ केयर एज दिस वन. सो हेल्थ केयर इंडस्ट्री इज ए ग्रेट पोटेंशियल. वाई? because I think government is also want to promote medical tourism, and that's going to open up a huge prospects. Not only domestic demand, also but the global the investors, not the investors, but the patients coming to India for treatment. Why? Because India is much cheaper and quite advanced in terms of technology. That's a good potential, and that's one of the reasons in this complete Saurabh ji, in this complete industry, a lot of private equity players are coming in. Am I right? So the industry is a great potential, but of late I have not been able to track this industry, so I don't have any view. So I'll go with the score what is available right now. Our score says max is higher as compared to Narayan Hrudaya.
Okay, I'll pick this next question by Mr. Lakshmi. He's asked me to avoid human emotions and pick his question up. The only thing was that you asked a question quite before the webinar, so I missed it. I want your view on TV Today and TCNS clothing. I'm holding both with more than 60% loss. As it is already down too much, should I hold it or book losses? Also want to know your view on tube investments. It fell from 20% of high.
So let me pick up the easy one. That's a tube investment. I would continue to hold. It's also a stock of the month, Lakshmi ji. Yes, it has gone down from the high. See, it's all the overall market sentiment has been different. I think the business prospect, the company going to launch its three-wheeler electrical, it was delay. They sounded little optimistic about that optical glass for the lenses for the camera. So I think the business prospects looks good. CG is a holding, they're holding company for CG. That's doing very well. So I think that all makes me very, very comfortable. Lakshmi ji, what you are doing is a typical human emotions wala ek hisab, कि मुझे loss में बिकना नहीं है. And I have said many times, loss book करनी अच्छी बात है. Why? Again I repeat, because we are creating liquidity to move out of a underperforming stock to invest in an outperforming stock. So my advice would be, sir, TV Today as well as TCNS clothing, please book losses and invest in stock of the month or Mojo stock. You do stand a chance of recovering the money, what you lost. I'm not saying that you will recover 100% immediately, but if you keep doing this strategy, maybe over the period of time, you will be able to recollect. And I'll give a classical example of, Suzlon. I know this company has been come so many times to me that, I've time and again. Suzlon, every time it gives a hope. Loss book karna nahi hai kisko bhi usme. And, every time it gives a feeling that your company chalega, and somehow it did not, this one. And I said, बुक लॉस करना कर लो, बिकॉज दूसरी कंपनी डालोगे शायद वो कंपनी से ज़्यादा अच्छा चलेगी एंड यू विल मेक मनी एंड दैट्स व्हाट माई. तो टुडे सुजलन इज ओनली एट 8 rupees. It did move in double digit and again came down this one. So my advice would be, please book losses, sir. Please.
Okay, Mr. Sunil, that's it with the Q&A session for today.
So very interesting question that we had, very wide range of questions that Jason you could cover. Once again, thanks a lot to everyone taking time out and attending this webinar. Tomorrow, my colleague Karan is going with a very interesting topic on mutual fund. I request to all of you, please attend that webinar. I think it's a really great, and you will really, it's worth 1 hour to attend that webinar because you'll get a lot of insights. With this, thanks a lot to everyone taking time out and attending this webinar. Thanks a lot, Jason, for hosting this webinar. Over to you.
Yeah, thanks a lot, Mr. Sunil, and we'll be shortly sending our invites for tomorrow's event of Karan Batra. Looking forward to seeing you all come for the event. Goodbye and have a great evening. Thank you so much.